Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
It's going out there. It's June 28th. Not Frank Curtis, just Wall Street Pie. So I break the headlines and tell you what's really moving these markets. I don't want to brag or anything. I've been working harder than ever. Lately, I've been putting out a lot of content, taping videos. And if you guys noticed, our Curzio One members, those are our elite members, prime members on all of our products and every product we're going to launch anytime in the future. Just sending you guys an update. Just taped an update for Curzio equity owners. Should be getting that shortly. That's an update sent to all of our investors in Curzio Research. We're our token, security token, Curzio equity owners, a symbol CURZ, trades on T0, similar to a stock. Offers you or anyone an equity stake in our business. So you guys just got to update on business operations, what we plan on doing in the future, really good stuff. Then we got the podcast that I'm taping. I taped Curzio Venture Opportunities yesterday. It's a small cap newsletter. Subscribe's going to get that issued later today, or after you listen to this, with a new recommendation I'm really excited about. More on that later. So incredibly busy, working late, because my office is an hour away from my new home, and I plan on moving the office in a few months. But it's just been really crazy. I haven't got a chance to do that yet. So on the home front, my wife, she's home with the kids since they're on summer break. And my daughters, 12 and 15, they love each other to death. My daughter, my oldest, just got a permit, but they can't drive. So they're in the house. I'm driving back and forth, with their friends and stuff like that. But, they love each other to death while hating each other at the same time. I mean, just normal sibling stuff, right? They always got each other's back, but man, the wind blows and they're fighting over the dumbest things. It's just yelling, fighting, craziness. So when it gets unbearable, which sometimes that happens, my wife call me in the middle of the day and say, I can't take it anymore. You got to yell at them for me. And this is normal. And this is a really tough job and everything. And she keeps fort down and things going well on the home front. But everyone that has kids knows exactly what I'm talking about. Sometimes it gets a little crazy. I get it. But it reminds me of a story of my mom. And she tells us all the time. And when my dad was working, and me, my brother, and sister, we would have these massive fights. Sometimes we have fist fights. We just fight all the time. Right? Go crazy again, sibling stuff. We're living in a small apartment where the landlord was downstairs. So, he used to hear the banging and come up and tell my mother, listen, you need to shut these kids, tell them to shut that up. Or, and he's an Italian guy. He used to do an Italian, great guy. You love him as part of the family, basically. But he's just, you got to shut the kids off. Hey, I can't take it. The chandelier's shaking and all this stuff. So, my dad was super busy. And, my mom called him one day. And my dad was just so busy. He actually called the police. So the cop car came to the house with the lights flashing and pulled up in front of the house and, rang the bell. My mom was mortified, right? Because the lights in front of the house, everyone's like, what's going on? What happened? And they were really cool. They were saying, look, we see this all the time. We'll talk to them. We'll scam a little bit and all's okay. It's when, cops were they still are today considered very cool. But right now it's like the enemy of the United States right now. But they were cool and just like, we'll talk to them, don't worry about it. But she was mortified, right? Because all the neighbors saw the cop car, lights flashing from the house. They're like, what's going on? They were calling her. And I could say my mom never called my dad to bitch about the kids again. And earlier this week, with how busy I was, when my wife called, I was close to doing the same. I was about to do it. But props to my dad. That was pretty creative. And again, I understand that a lot of people deal with this, whether it's a mom or dad with the kids and stuff like that. It's awesome. We're home for the summer, and you got to entertain them at that age all the time and driving places. It does get a little crazy, and she loses a lot of her free time. Anyway, hopefully you guys aren't dealing with that as well. But I wanted to talk about the markets. In fact, I want to talk about one story in particular that I feel like is not getting a lot of attention. And I don't know why that is, but it's something that could have negative implications for your portfolio, especially if you're invested in the wrong areas of the market. And it was covered today in the Wall Street Journal, which was really cool. And there's a story titled, and they say this is an exclusive to the Wall Street Journal. It's titled, "The U.S. considers new curbs on AI chips to exports, those AI chip exports to China," right? So they're considering new curbs. They already have curbs in place. And here's why I love doing the podcast. Because this is a major story being reported in a major paper, and you have CNBC all over it, right? You have AI that's massive. Nvidia is the biggest manufacturer of the greatest AI chips and receive lots of business from China, right? Lots and lots of revenue from China. And these new restrictions are going to limit Nvidia's sales of China as well as AMD. And it's, CNBC's all over this morning, which is part, Wall Street Journal's part of CNBC, and underneath, the whole conglomerate. And chip stocks are getting nailed, right? You have Nvidia down 3% today. It's down 10% from its highs. It's a big deal considering Nvidia's price for perfection at 22 times sales. And if you're eliminating some of those sales, which some say you can cut 10 to 15% of sales, again, you need licenses and stuff. And we know how China's going to be like that with licenses this way. It's basically showing everything that they're doing. They're not going to sign this stuff, right? They're saying they're going to need to provide a license. Basically, that's not what they're going to do. So, yeah, the U.S. is lobbying Netherlands, Japan to do the same in limiting these chips to China. And the reason why I love this podcast, I love what I do, is because of you guys. And last week, one of my best contacts, who's a Courtesy One member, gives you great information on China, sent me a great research report. And mostly, the story he was talking about, I didn't see reported anyplace. And I started looking into it going, hey, this is interesting. And he asked a question, which I took on Frankly Speaking. And he said, on Friday's Frankly Speaking, he was asking me, do I believe the recent surge in demand in NVIDIA's chips is from China stockpiling, as they hoard these chips ahead of further, sanctioned regulations, whatever, right? But whatever you want to call what the U.S. is going to, policy and restrictions and stuff like that. And I started looking into it. And this is the case in 2021, same thing. When U.S. imposed his restrictions, where NVIDIA, they sell the best GPU chips. Again, it wasn't so much into AI as it is right now. But these GPU chips absolutely surged in price as China started hoarding these things and selling them on the black market. So I started digging in a lot. And again, I answered that question on Friday's Frankly Speaking and saying that, I'm not too sure if we're going to see that kick, because I know that the big guys are really, are spending a ton in terms of AI. It's just for NVIDIA to report the quarter that they did. It's something I never saw in 30 years. You never see a company raise guidance. I'm not talking about 30% in sales from 100 million to 130 million, something like that. It went from 7 billion to 11 billion. That's what they're expecting next quarter. You need something like something fundamentally has to happen in order to see that. And he was like, was this part of it? And I started looking into it because you can see strong demand and you raised, 8 billion would have been good, and 11 billion. It's something that, like, holy shit, blew away the market. It's something that, again, I've been covering stocks for 30 years and looking at conference calls specifically for 15. Love covering this. I've never seen anything like that, anything close to that. So I started digging and looking at it, and here I have information before it's being reported in the Wall Street Journal and CNBC. And the reason why is because of you. And we have a significant advantage with Wall Street Unplugged over other outlets. If you're looking at financial media, some of these you'll see clearly have an agenda, right? They're going to report news based on who's paying them, whether that'll be directly under the table or through media buying. Everybody knows that by now. They know the agenda that goes along where, depending on if you're right or left, that's what's going to be reported on these media channels. Courtesy Research is 100% unbiased, right? We're just trying to get the story right. And how do we invest based on that information? But it's all about information. I'm not talking about inside information. I'm talking about information that we got on COVID. I mean, that got us in trouble, right? Reporting honest statistics during COVID. That didn't impact kids. Be careful taking the vaccine. Older people should be taking it. But, the fact that they're forcing kids to wear masks, it's crazy. And it resulted us in being censored on YouTube. And again, if you search for Courtesy Research, all these videos, if you want to watch my ugly face, sometimes we'll show charts and figures and stuff. We broadcast on YouTube. And I mean, even if we didn't try to market and did nothing, I feel like we'd have more people subscribing than now. I see people with 100,000 on their channel, and it doesn't compare to the iTunes downloads and every other channel, right, that we see, which is, tens of thousands of people, an audience that's going out to 100 countries, right? So we didn't get any traction on that. Why? Because reporting real information, not biased information, not bullshit. I'm trying to help people survive. I have kids. I want to know the story. And it was crazy at the beginning. And people forget that in New York with Cuomo, and nothing against Cuomo because nobody knew the extent of what was going on with COVID. But when it first hit New York, that was the first day to hit. What happens is this guy decided to take all the sick people and put them into nursing homes, which we know that those old people are at most risk. So you forget. When this first hit, the percentages was 10%. 1 every 10 people die from COVID. That was a percent at the beginning. So they had these ships going up the coastlines in California and New York because the hospitals, it was craziness, right? So getting data from leading doctors across every place, being able to interview people on lockdown in China and in Italy in January, February, and understanding this and bringing subscribers helped us tremendously. It helped us get out of the market and then get back in, right? And that was the goal. Goal wasn't like to be disruptive and shout from the top of a building and say everyone's full of shit and be political about it, right? It shouldn't be based on blue states and red states. It should be based on what's the safest bet for our family and children, and that wasn't the case, right? All our politicians use this for whatever they wanted to pursue their own agendas, and we know that now. So Wall Street Unplugged, that network of you extends to over 100 countries, and this is just an example of the China story and things that I'm proud of, where reporting on things and talking about them before they're getting reported in the Wall Street Journal, and this is information available to everybody out there. We've seen this. For me personally, one story that happened is, I go to Walgreens all the time. And all of a sudden, I went to Walgreens and got prescriptions. And, they take 3 prescriptions. And they were like, it's $95. I'm like, it's usually like $12, $15. And they're like, we don't accept United Healthcare anymore. I'm like, what? United Healthcare is, what for my business, right? That's the healthcare for my business. Walgreens doesn't accept United Healthcare. And what happened? Walgreens just came out and their numbers were freaking terrible. I mean, how don't you support the largest? What's going on there, right? That doesn't make sense. To me, that doesn't make sense. But just, from everyone's experiences where this goes out to, right? And many of you, tens of thousands of listeners, where you're business owners, doctors, lawyers, hedge fund managers, financial advisors, college students, your emails into me at frankkerseyresearch.com, tell me what you're seeing. What's going on in your industry? Doctors telling me, hey, these drugs look pretty cool and doing very, very well in FDA. There's a good shot that these things could really pass. And again, stuff that's available that you just don't see reported a lot of times. Like, do you know what's going on pretty much in sectors outside of technology right now? Because if you're watching CNBC, or again, not picking on them, but they're going to talk about the biggest companies in the world, the Nvidias, the Teslas and stuff like that. And there's thousands of other stocks that are being ignored right now. And I'll talk about that in a minute. But, just getting information, again, from leading doctors, from social media platforms that are spreading like wildfire in college communities. People in college are saying, Frank, you got to check this out. This is amazing. It's this information is incredibly valuable because it's real time. It's information I could take and then find a host of companies that be beneficiaries, start listening to the conference calls, and they start to talk about this. There's also names that get crushed by new technologies and trends. It's helped me tremendously, especially over the past 10 years, but even more now that so many people email in. And I just want to say thank you. I mean, that's what this is about. That's valuable to me because it's made me money. I'm hoping that it's made you a lot of money, even through our products and services. It's getting this information because it's different. Real time is a big deal, right? It's different from many of the economic indicators that are reported all the time that we hear. GDP, unemployment, whatever, right? These are lagging indicators, right? A lot of these get revised. GDP gets revised 3 times over a 3-month period. 3 different times it gets revised to get the right figure that was reported 3 months ago. Which means a lot of this information could be unreliable. And when you have that information that people are focusing on to trade stocks on, and that could change, that results in the mispricing of assets. That results in wild stock swings in stocks or even in sectors. And you could take advantage of that and make a lot of money off of it. And that's how we knew the Fed was crazy saying inflation was transitory. We knew they were full of shit because of the emails. Right? We knew interest rates are going to surge much higher than every single analyst out there was predicting. I know because I have access to all this research. If you subscribe to any of our products, I share research from the biggest companies in the world with you and highlight some of these areas because it's important for you to for me or for anyone, right? You want to look at what the analyst is saying. You want to look what's being mentioned on CNBC because that's a consensus. And you need to understand why things are trading where they are because this is what people believe is going to happen. And if you could do the research and say this isn't going to happen or this is going to be much bigger than these guys expect, that gives you the opportunity to make money both on the long and short side. And that's what we do here. So we knew interest rates were going to surge much higher than every analyst was predicting. We had access to all these reports, and we knew. A lot of these analysts were predicting, 2-3% peak by year end 2023, and this is in 2022. It was like, you're crazy. We're 5% still going higher. That's how wrong they've been. We've been saying pretty much since October, even when the market crashed, and everyone say, well, the Fed's going to start cutting rates probably mid this year. Definitely, everyone had them cutting rates in 2023. I think every single economist, and they was saying this up to March, and we were like, no way, you can't. Not if you're serious about your 2% goal. Which, by the way, I just heard. I don't know what meeting it was or whatever. It's CNBC's broadcasting. I just heard it now, and Powell said, they asked, when do you think we'll get down to the 2% target? You know what he said? This is the first time he said this. I never heard him say this before. He goes 2025. And the anchor for CNBC asked a great question, a follow-up question. And she was like, does that mean policies are going to be restrictive in 2025? He's like, well, they may not be restrictive, but, we don't think we're going to get down to 2% by that's not, nobody's factoring that in. I mean, that was supposed to happen by the end of this year. And we're still raising rates, right? So you see a lot of this stuff, and I'm not saying this to pat myself on the back and I'm a genius and I know all this stuff. I'm able to come to these forecasts because of information I get from you around the country, around the world. That gives me a real-time perspective on what's going on. And a lot of times that's different from what I'm hearing in the media, and that makes that incredibly valuable, right? It benefits everyone that listens to this podcast, right? There's this awesome network that we have. So I encourage you to email in, frankkurzerresearch.com, whenever you do, whenever you see certain things. Also ask questions. I answer questions on Frankly Speaking, and Frankly Speaking is available to anyone who has a paid subscription, even if it's for Wall Street Unplugged Premium, which is $10 a month. You automatically get access to Frankly Speaking every Friday, where I take 3-4 questions and answer them, and it's a pretty cool podcast. It's about 30 minutes long. And you'll hear your name in the podcast, which is pretty cool, and I guess people get excited, but some of those questions are really good. But, I encourage people to email in. And one topic that I feel right now is not being covered by mainstream media is the massive destruction in demand in China. China has been the growth engine of the world for a long time. It was supposed to return to growth this year. Huge growth. That's what everyone's expecting. That's what we're going to see the growth from. Here it comes. Got a couple of data points early on, and people are like, we're off to the race. Everybody started investing in China and saying, this is great. But a lot of it turned out to be bullshit, like we see a lot from China. And it has nothing to do with the people in China. I went to China. I love the people I'm talking about, with the government reports. Many investors, hedge funds in the U.S. were betting on this growth, were betting it and restructuring their portfolios to go more into stocks that have the most exposure in China. And you could say, Nike, Starbucks, Yum Brands, you can go on and on. I'll give you the whole list. And even Nvidia. Now, just the data that I'm seeing, some of the stuff I'm going to share with you is pretty crazy, okay? And it should scare you. And before I share that, just want to say a quick word from our sponsor, who's Masterworks, longtime partner. Masterworks owns an art investing platform, and demand right now is absolutely surging because it gives retail investors access to some of the finest art through tokenization, right? You guys should be feeling tokenization because that's what we did with Cursory Research. We could own a piece of a painting, right? Fine art, similar to shares of a stock, and participate in the massive growth this fine art has seen for decades. Again, this part in fine art was, most retail investors did not have access to this. So they've been at work the last few years in the alternative space, selling $45 million in fine art in 2022, distributing the net proceeds directly to investors. Masterworks platform can even take advantage, right, for the tax advantage retirement accounts, or you can go the retail route, which you just talked about, and use their mobile app or website. And each of Masterworks' 13 exits so far have returned a profit to investors. That includes several sales already made this year in 2023, despite the bank collapse, continued volatility. So paintings can sell out on Masterworks' site in hours, but right now you can get prior access to skip the wait by going to masterworks.com using the promo code. Please put it in Wall Street Unplugged. Makes a difference. It's going to give you special access. That's masterworks.com, promo code Wall Street Unplugged. Now, there are a few things coming out of China that just scared absolutely scared the crap out of you. I can't even say it because that's how crazy it is. But again, I'm not seeing these stats reported in mainstream media. You're seeing mostly on certain YouTube channels, and these YouTube channels are not just fly-by bullshit. These are people that have lots of subscribers. Some of them got kicked out for reporting some of this data from China and are back online, but they've been reporting. Some of them are journalists and been doing this for a long time. And similar to what we're doing, no bias. Here's a few things. No one's talking about the yuan crashing. 7-8 month low. And despite crashing, what's supposed to happen? It's supposed to lift exports, and that's not happening. And that's really bad. Because also making its dollar-denominated debt even harder to finance. And you have some people out there, very smart people, who's throwing around default. The word default. Something you don't really hear from governments. Especially from governments from developed or emerging markets. China's unemployment rate in urban areas is, take a quick guess, 50%. 50%. Home prices in Shanghai are plummeting. They're down 25%. That's how much house prices fell, maybe a little bit more, some areas 30%. But on average, I think it was around 25, 27% during the housing crisis, the credit crisis. That's insane. Ships have been docked for days at major Shanghai ports to expose how China's government is manipulating the Shanghai Container Freight Index, right? This is what they show. There's like an increase and how the price is going up when actual shipping rates has been declining. Again, it's hard to pad this stuff when you have satellite, cameras, people taking pictures. Again, they don't allow a lot of this shit in China. You got to be careful. But there's really good people reporting on this stuff. You're looking at real estate. How long have we heard this story about real estate and how terrible it's been? At least 10 years, right? It's terrible. It's horrible. Real estate's going to crash. You have all these cities, these ghost cities, and we see pictures of them, right? And we see, commercial real estate's horrible. It's much worse than anyone believes. Again, being underreported. How do I know? Well, in March, let's hear from the companies. China Everbright said its bad property debts last year rose 185% compared to 2021. China Merchants Bank said bad property debts rose 171%, while Shang Bank, and I'm probably saying that wrong, I'm pronouncing it wrong, rose 163%, Z-H-E-S-H-A-N-G. Again, getting the four biggest here. And China Minsheng Bank rose 62%. It's getting worse. Much, much worse in China. This is the growth engine of the world that's supposed to help us grow and push us forward, whether we go into recession or avoid a recession. This is where we expect the growth to come from, and we're not seeing it. And now more restrictions on China, things like that, stuff that, we talked about, Friday's podcast, information I'm getting before you see in the Wall Street Journal, which is awesome. I'm not cherry picking data here and just taking some data points, right? You want to be very, very careful. We're investing in this. We want to get the story right. We don't want to cherry pick data. That's not what we do here. Right? Many of this can be found, again, on YouTube channels, experienced people, reporters, good sources. And Daniel and I are going to share some more crazy data and more importantly, show you how to play this and ways to play this or to avoid and just talk about a little more detail in tomorrow's Wall Street Unplugged Premium podcast. Again, and just talk about more stats, more figures that I'm not seeing reported mainstream media. And I follow this shit all day, every day. And some of the stuff that I'm seeing, it's so crazy that I'm looking for backups and another backups, and I'll see some of this stuff. But the things that are being reported by the government, and people always say, well, the government's lying. Lying is one thing, but what's the extent of the lie? Are you just lying a little bit? Or are you lying a lot? Is shit going to default, or are we seeing a minor slowdown? That's a big difference, especially within your portfolio. Because if you're positioned the wrong way, it could really, really hurt you because there's a lot of stocks out there, and maybe not so much in the Macau stocks. They said that podcast last week that, people are going to gamble no matter what. They're going to have their vices, and that's an area that was closed, and it makes sense, right? People are going to gamble, and that's the only place to gamble in China, right? So that's awesome. In Macau, I've been there. It's cool. It's beautiful. And, again, they had smoking restrictions, which I think some of them reversed, which is a good thing. Because, Chinese people love to smoke and gamble, but in other areas, it hasn't been good. And you're seeing even companies report who have exposure to China that hasn't been good, but it looks like it's a lot worse. Figures are being reported out of China today that are saying year over year, they're declined. Okay, economic data. A year-over-year decline. If you take this month and look last year, China was freaking closed. How could you be declining year over year? I mean, that is significant. So again, we're going to cover a lot of this stuff. And this is going to be Wall Street Unplugged Premium tomorrow. Get more details and then share a lot of stock picks and just different things. And of course, we'll come up with one stock pick. Not sure if it's going to be related to this because I don't know if we'll have a short or whatever. But we always recommend one stock for Dollar Stock Club for Wall Street Unplugged Premium members. But Daniel and I will cover this more depth. But definitely start focusing on this because it has serious implications for the U.S. economy and the global economy. Because again, China has been the growth engine of the world. The expectations that was going to roar back. And not only we're not seeing it, but it's a lot worse than is being reported. Now, before I go, right, today you're going to be receiving a special email from me. Okay, another thing that I take. It's going to give you the opportunity to talk to me directly. So I have a special promotion where our 3 best products, most expensive ones, that we sell for $5,000 a year, that's Curzio Venture Opportunity, Money Flow Trader, Crypto Intelligence, providing a one-time offer, $1,000 for any of these products just for Curzio Research members. So it's $1,000 for a year for any one of these services. And for the first 100 people that subscribe, you're going to get a 10-minute phone call with me. You know, I can't give you personal advice, have you check off a box for that, and again, compliance, stuff like that. But once you subscribe, it's going to take you to a calendar, and you'll see a bunch of time slots. You just got to select one. You schedule your call with me. It's that simple. There's no gimmicks, no BS, no nothing, right? It's just something that we've never done before. I don't think anyone in our industry has ever done before. And while the call is really, really cool, and I always want to provide that because I like talking to people on the phone sometimes. They just give, access, right? I mean, being on the phone with someone and talking to them compared to, especially emails. We're lucky enough to have a podcast. A lot of places don't have podcasts and you only hear emails. But talking to them, it just gives you more of a personal feel. And that's what we want, right? We want to help retail investors and help 100 people. But more importantly than the call is I'm discounting these services because I see incredible opportunity in all of them. And I usually don't see incredible opportunity in every single one. So there's lots of sectors and stocks trading at crazy valuations, as you know, a lot of risk to the marketplace. Money Flow Trader bets against these names by using long-dated puts, not shorting, which could get you annihilated, but, just the amount of money you put in. And you only need a 10, 15% decline in some of these things really early on, and you could really, really make a killing. And I think we're going to see that considering there's more buy ratings. If you look at a 10-year average, there's more buy ratings and fewer sell ratings heading into this quarter. And that's based on FactSet, that free report you can get. Expectations are very, very high right now going in, which were not that way in earnings last year. And if we see companies miss earnings, especially ones in technology that are up 100% of the year, it's pretty easy for them to see a 20, 25% decline, and they'd still be up on the year, right? So when you see that and you get one of those, I mean, the increase, it's like 3x, 4x, 5x. Yet if you continue to see a bull market, so the first 6 months, you're probably not going to do as well. But where do you think we're heading next 6 months, right? And I talked about that. You look at crypto intelligence. Crypto's on fire right now. And it's not a summer thing, a short covering. It's not, because of a Bitcoin fork or anything or just a quick blip. The move is being driven by a fundamental shift that's going to change the landscape of the entire industry. Okay, BlackRock and Fidelity just filed to launch Bitcoin ETFs. Of course, is after SEC cleared house of all the smaller players who were hoping to do this. Fidelity, Schwab, Citadel just announced a couple weeks ago, new crypto exchange that will trade cryptos, right? Starting with the 4 that they know are going to be deemed or won't be deemed securities, right? That's why you got to worry about Coinbase because 90% of those are going to be deemed securities. And that's why I think Coinbase, they filled out their license for security tokens, which puts our token in a position to possibly trade on these exchanges. And that was the goal. It's taken a lot longer to happen because I think the SEC will regulate this industry a lot quicker, but it is going to happen. But they have Bitcoin, Litecoin, Ethereum, Bitcoin Cash trading now. Okay, smaller right now, but if you look at the bigger picture, Fidelity, Schwab have over 70 million accounts combined. And most of these people are going to have access to cryptos for the very first time, an easy way to purchase them. These companies have trillions in assets under management. And most of the push in crypto, even at 60,000, it was driven by retail. Now you're seeing the institutions start to come in. BlackRock has 10 trillion in assets under management. All those firms have huge political influence, meaning these companies would not be putting their time and effort and their money into crypto if they believed the SEC was about to ban the industry, or if they believe crypto would not be a massive, massive growth opportunity for the next decade or longer. These companies don't do that. They don't make mistakes. But the biggest opportunity I see right now is in small caps with Curzio Venture Opportunities. You don't hear me say that a lot in this podcast. But if you look at our portfolio, it's really starting to kill it, which I'm ecstatic about because it means that my subscribers are starting to make a lot of money. We have a stock in there called Enovix, up close to 100% for us. It was up 20% yesterday on very, very good news, from a new order for its lithium battery packs for the U.S. Army. This is a company that got annihilated. We were able to pick up because nobody's paying attention to small caps right now. Norwegian Cruise Lines. I know you're familiar with cruise lines, right? They were surging. They're through the roof. It's up 40% for us. Around 40%. We sold stock yesterday, and we bought this name about a year ago when the stock crashed and everyone hated cruise lines. Did the research on it. I like Norwegian better than the others because they already restructured all their debt. They tail to higher-end consumers, which I know are going to continue to spend no matter what, especially on travel. And now that everyone loves the cruises and the stock ran up, we sold it. Right, that's when we want to sell it, right? Because we think, it's excitement behind it and, pull back a little bit because we had Carnival reported, not so good results earlier this week. AVAV, that's our oldest position in the portfolio. This is a stock that I've always loved. Again, I really don't keep stocks in a portfolio for years. This is one that's been there for years. This AeroVironment. This is one of the largest drone manufacturers with the best unmanned drones. Unbelievable. This is what's going to Ukraine. They're getting massive orders. Stock's up 250% for us, and it's up today, sharply, right? Last night they reported earnings that blew out the numbers. Earnings per shares, sales, just on everything, right? They beat on earnings per share. Sales came in at $185 million compared to $159 million. They also raised guidance significantly to $2.45 a share. That was from $2 a share, and they raised their revenue projections from $650 million from $600 million. It's important you understand that because right now, as of last quarter, if you look at FactSet with all the earnings reporting, right, Q2, sales, they have projections. Sales are expected to decline year over year for S&P, on average, S&P 500 companies. Decline a little bit. And earnings are expected to decline as well. And they declined 6% last year over year. So you're looking at a company that's raising sales significantly, something that you're not seeing in this market, and raising earnings significantly. Right? So, again, pure play drone company, one of the best unmanned drones, massive demand since Ukraine-Russia war, and this war's not going to end anytime soon. So I think it's not going to go considerably higher from here. And today we just recommended another name that's down 35% from its highs. Great company. One that you likely never heard of. Again, small cap world. The CEO, 40-year veteran of the industry. He's on all the major boards within this industry. He's amazing. He's great. A lot of research on him. Buying shares hand over fist right now. Again, nobody's paying attention to this because it's a small cap. Everyone's paying attention to Nvidia's and all technology. Not only is he buying, the company's planning to buy 14% of its float back. And the three major negatives that pushed this stock down 35% in the past 9 months, they no longer exist. They no longer exist. And that's the biggest thing. That's what we saw at Enovix. That's what we saw at other companies. That's what we saw at Meta. And unfortunately, we failed to pull a trigger because everything that pushed Meta down 60%, they addressed. Whether it was, the Apple, iTunes, whether it was, slowdown, TikTok, right? They created Reels. They dealt with the slowdown in advertising when they saw a pickup and change, some of their algorithms and things like that. So everything that pushed it down, once you change, look what happens to the stock. It roars back, and then it roars back usually much more because you cut costs significantly, so you're very lean and earnings explode. That's what we're going to see in many, many small caps, and we're starting to see it, especially as of last month, right? So the portfolio is doing very, very well. I mean, with this stock right here, just to put in perspective, there's 14 analysts covering the stock. There's one buy. I don't think you'll find another stock that has 14 or more analysts covering, sell-side analysts, and have just one buy on it, right? You won't see that. So expectations are super low, which I love. Yet the average target price from these analysts, again, only one buy rating, is 16% higher than the prices right now. So this is a company that just needs a little bit of good news, and this thing's going to take off. Not great news, just a little bit. And by the way, the CEO, chairman, right, who's buying millions worth of his stock, he did so at an average price that's higher than where the stock is trading right now. So it's always nice to get at a cheaper price than where the CEO is buying. These are the types of ideas I'm seeing in small cap world. I mean, the sector is still down 25% from its highs, right? From November 21st highs. If you look at that, compared to the S&P, it's 7%. And the NASDAQ, many large technology names trading near all-time highs and insane valuations, considering it's a surprise, right? Earnings from many, outside of Nvidia and Meta, have declined year over year. So when you're seeing this disconnect and you're saying, well, Frank, the economy could pull back or whatever, there's got to be a rotation here. And that's what you're starting to see because there's so much money that it's so over-owned in large cap tech. They're looking for ideas, and these ideas are sitting here that are unbelievable. I mean, so there's currently 7 positions rated to buy right now in our portfolio. And usually for me, like if I'm researching and running screens, talking to my contacts, putting due diligence, Dan and I discuss, different ideas and stuff like that. I mean, we find 1 or 2 small caps per month that we'll look to recommend. And I'll throw one of them in there, and you get that recommendation for the month in Cursory Venture. Today, I'm seeing dozens on my list. And it's a hated sector. Again, many of these companies are still down 35% from their highs. They already cut costs. Insiders are buying. Balance sheets are strong. And they're starting to grow earnings again. And when I see the way tech is trading and that rebalancing taking place, when I'm looking at small caps, and I'm not talking about the whole Russell 2000, okay? I don't know where the Russell 2000 is going to go. I'm just saying there's lots of ideas in small cap land that make sense. And they make sense because you only see things like this during extreme times. And these are extreme times, right? We got interest rates are surging. Economic data makes no sense where you can look at 6 or 7 indicators that are telling you we're heading for a recession, and then 6 or 7 indicators that tell you that inflation is rising, the Fed has to continue to raise. We're all over the place. That's what happens when you inject $11.5 trillion into the market. And $4.5 trillion when all asset prices go back to all-time highs in 2021. That's what happens. Now it's craziness. But this is where you see the mispricing of assets and the disconnect between the company and where the stock price is trading. So it's a lot of fun in small cap world right now. It wasn't that much fun in 2022, I'll be honest with you. And you're going to see lots of new ideas make their way into portfolio over the next 3-6 months. But all 3 of these products really make a lot of sense. I'm excited about all 3 of them. And that's why one time only we're discounting them. So the good news is if you decide to subscribe and you're one of those first 100 people, you don't have to subscribe to that product first. You can wait to talk to me to subscribe to that. So it's a 10-minute call. It's up to you. But you will see that offer later today. Spent a lot of time taping it and being careful about it. Again, something we never did. Hopefully it doesn't blow up when we have 700 investors call. I try to get in, but it's going to give you an opportunity for the first 100 to talk to me, 10-minute conversations. Again, can't give personal advice, but I think that's a really cool thing. And also getting a discount for these services because I know by buying them right now and seeing what I'm seeing and where I'm investing my own capital right here, I think you're going to be happy in a client for a very, very long time for these services, these 3. So it's a unique offer. Want to provide value to my listeners, subscribers. That's why we're not sending this to any outside lists. It's only reserved for you. And you'll get that offer later today. So guys, that's it for me. Questions and comments, I said earlier, keep them coming in. FrankKurzResearch.com. And thank you for all your support. Love you guys. And I'll see you tomorrow on Wall Street Unplugged Premium. Take care.